Good morning, everyone. Welcome to the Macro Snapshot. We are Tuesday, November the 11th, 2025. So fairly quiet overnight session. One thing which did get the market's attention was some numbers coming out of the UK. Of course, today, just keep in mind, as it's November the 11th, which is Remembrance Day or Veterans Day, that means the US cash bond market is closed. So that could have a fairly quiet day in the bonds. But talking about the UK bonds and the gilts here, you see that there was a huge opening gap here of the UK gilts, and that's just because the employment numbers came out. If we actually look here, I'll just grab the charts from the daily shot here. You can see here that the unemployment situation worsened quite a lot here. And if you look at the unemployment rate, you could see it actually came out in worse than expected at 5%. So that's starting to really sort of push up a little bit higher here. And it's interesting, just getting back to those gilts, that some of this bad data, it's pushed the possibility of a BOE, so the Bank of England cut in December. That's gone to 18 basis points priced in now versus about 15 basis points before the release of this employment data. So as I said, you can look at the unemployment rate heading up to 5%, which is actually getting the worst it's been for quite a few years. Then if you also look at payrolls, it came in at minus 32,000, so that was lower than expected. So you can see here, if you look at the overall trend here, that this is a month-over-month change, you can see that really here things are sort of deteriorating, quite a bit or in a steady sort of fashion. Then if you look at the number of people claiming unemployment benefits, you can see that obviously this is a COVID spike here, but you can see that that's also sort of at a fairly sort of a high level. So all in all, things not looking great in terms of the employment situation, and that's being reflected in the wage growth. You see here basically the wage growth is sort of trending downwards. So what we can see there is the reaction in the gilts. Again, if we go back to a couple of the charts here, you can see how the UK bonds pushed up, and no surprise that the pound sterling actually weakened a little bit. If I could just pull this up here. So you can see here, this is the daily chart, but so it's come back a little bit, but basically the pound sterling are sort of falling against the US dollar, which itself is, has been fairly sort of flat. So all in all, it looks as though the BOE is potentially on a path to cut in December. Although we have to keep in mind that Governor Bailey recently was saying that inflation is still very much too high, and it's their sort of main concern at this point. Just in terms of some of the cross pairs, just on that weak British data, you also saw that, for example, the euro against the pound, you see here a much stronger reaction compared to the US dollar. So that looks as though that's pushing higher. That could almost be some kind of bullish breakout here, like sideways consolidation. It wouldn't surprise me if that pushes a bit higher. Just sticking with the European currencies, again, fairly quiet overnight session. But what we did get, we were starting to get some rumors of a trade deal or a trade renegotiation between the US and Switzerland. So if we actually look at the Swiss franc here, you can see here that the US dollar has actually been weakening in the last few days, especially yesterday. And that's because we know that we had the tariffs in Switzerland in, I think, about 39%. There's sort of talk that there's been a lot of negotiations going on. And as soon as this Friday, Trump could announce that the tariffs on Switzerland are being reduced from that, I think late 30% down to about 15%. So that's obviously a positive theoretically for the Swiss economy. And we can see here, as I say, that the Swiss franc is strengthening or the US dollar weakening against the Swiss franc. So that looks as though that could push down a little bit more. If we look at the euro, not a huge amount happening. Again, it was up against the UK pound, the British pound. The euro, it's basically a function at this point of the US dollar. It seems to have found a base here. You can see here this is quite a strong support at around about the one, or let's call it about the 115 sort of level, and looks as though it could push a little bit higher. This morning in Germany, there was the ZEW survey, which is like business confidence. That came in a little bit on the soft side. There wasn't a huge reaction in the market. But the commentary coming from the ZEW report was that although sort of stimulus from the government, was a welcome thing, there's still too many sort of structural impediments to growth. The labor market's still too ossified. There's still too much bureaucracy. So that was a fairly flat reading in the ZEW. But as you can see here, the euro is kind of a bit of a resistance here at the 100 EMA, but trying to push a little bit higher. In terms of other markets, Let's just have a quick look at the oil market. Interesting chart here. This does look as though this is the daily chart on the WTI. You can see that we had it's essentially been sort of in a range, weak price action, although it did get some support at these sort of key levels around about $56, well below the Fibonacci here. You see the Fibonacci a very, very deep retracement. But it does look as though if we push this on, let's say a 4 hour chart, which I'll just bring up uh, in a second. Just let me bring, sorry, a lot of things on this desktop. If we bring up a 4 hour chart, it's a little bit more detail. And you do see here that this could be construed as some kind of sort of bull flag here. And it does seem to be breaking out. It's got a bit of a sort of resistance now, the 200-day EMA, but it does seem to be breaking high from a technical level. Now, can oil go a lot higher? I'm not sure it's going to rip a lot higher, but for sure it may just want to push up to test some of the 100 and the 200-day EMA. And of course, we do have this sort of downtrend line here, which could be the first barrier. So a little bit of work to do. Although what we are seeing, and again overnight, we're seeing quite a lot of attacks by the Ukrainians on Russian oil refineries. So like a constant barrage of attacks on Russian oil refineries, and that's taking offline a little bit of Russian production. Maybe not a huge amount, but essentially it's just giving the market a bit of a pause. And so that does look as though oil could potentially break out higher. And we're also getting there's a few conferences around the world which were relatively bullish on oil demand. So it's not so much that that energy is transitioning away from the fossil fuels. It's more that there are a huge amount of energy needs in terms of AI and electrification of the world. And so it's almost as though there's additional energy required. So maybe nat gas, obviously the renewables, solar, electric, all of this stuff. But it's not as though fossil fuels like gasoline and oil are going away. And so some of these sort of conferences around the world is looking at that. And so there's a little bit of optimism in the oil markets. So potentially this is something which could break a little bit higher. We also had over the US quite, not only the US, but also North America in general, also up in Canada, quite sort of cold weather. And we see here that nat gas is pushed higher on that, now facing a little bit of resistance here. Although it's important to keep in mind that nat gas production, a lot going for exports, and so that the inventories are actually quite low for nat gas. Let's see if it can push above this 200-day moving average. And also, I was just looking this morning, the forecasts are calling for slightly sort of warmer weather, or should I say less cold weather, starting to happen over the next few days all across the USA. So maybe nat gas here, just as it comes up to the 200-day moving average, also a little bit of horizontal resistance here. Maybe that's due for a little bit of a pause, but that has been quite a positive. If we just look at just want to look at the volatility. You see VIX here sort of just falling down to just about 17.5. So that's just over about, implied move of about 1% per day. So that's going to be a little bit of a tailwind for equities. You can see equities here. Again, I don't know what to say really. CoreWeave came in with their earnings yesterday afternoon. That was a little bit softer than the market had expected and their expectations going forward. At the end of the day, though, you do have, the government reopening. It looks in the next few days in the States. The reopening sort of vote in the Senate has happened, so now it has to go to the House, potentially for some delays and sort of changes. But essentially, it looks as though the US government, let's say by the end of this week, will be reopening. That's probably a positive at the margin for the US economy. And we can see here that stocks yesterday had a little bit of a dip, but essentially pushing up. And at this point, if you look at the technical position here, this was like a sort of a bull flag, just touched into the 50-day EMA. And you've got to say that the path of least resistance at this point is probably to retest at least these local highs, about 69.40 or so. And if you put this again, let's just throw it on a 4 hour a chart here. You can see here that potentially the next measured move, if we look at that, is potentially going up to about 7,000 or so. So that's a definite positive. If we look also over at the Nasdaq on the 4 hour, you can see that it did have quite a deep retracement, but it does look as though it could test those recent highs. The other thing to keep in mind here is just looking at global equity, and it's interesting to look at things like Brazil, absolutely ripping higher. Although Brazil, again, if you look at the sort of some kind of Fibonacci measured move here or extension, you can see that we're starting to get into areas where it may want to take a breather. But Brazil really are sort of benefiting from extensive commodity exports, a lot of trade deals with China, and so the point is here that Brazil is going well, although it is getting a little bit overbought at this point. If you look at some other global indices, you see that India looks as though this is like some kind of fib retracement here, and a bull flag looks as though India wants to turn up. If we look at the Nikkei, also trading, relatively positively. So the point is that global indices doing quite well as well. If we look at the Kospi, we can also see that had a fairly a retracement down to the fib here, but also sort of pushing higher. And as the semiconductors continue to do relatively well. So global equity, not too bad. US government reopening. Not a huge amount of catalyst directly today. We don't really have much data. What we do have the ADP. Remember that the ADP employment numbers now. Sorry, I'm at the wrong chart. ADP employment numbers do come out weekly rather than monthly. So if you look here, you can see where are we? I think we've got this today. Let me just have a look. Could be wrong. No, here we go. At 8:15, ADP employment change, looking for 14,000. So fairly weak numbers. Let's keep an eye on that. But keep in mind that the bond market is closed. The cash bond market is closed. Futures are open, at least for partially today. So let's just see how the market reacts to the ADP. And as we get this government shutdown ending, we're going to start getting sort of the data. But keep in mind that a lot of the data, it's going to take a few weeks to come out. And a lot of the data at this point, here we are on November the 11th. We'll be looking back at September on October. So it's going to be quite choppy, quite messy. And the question the market has to decide, and actually the Fed has to decide, is this data still relevant data, from, let's say, a couple of months ago? Although if it does, in my humble opinion, if it does show a consistent pattern of strength or perhaps weakness in terms of the labor market and the general economy, that for sure is going to start estimating views of whether the Fed will cut or not in December. We shall see. Okay, guys, I'll leave it there. As I say, not a huge amount of stuff going on overnight. Actually, just one thing I did want to finally finish on is just the precious metals markets. Sorry, I just wanted to have a quick look at that. And we can see here that silver has pushed up to about the 61% retrace. So if you look here, you can see here that just on this impulse down here, you can see, hold on, let me just clean up this charts a little bit. So let's actually bring that there. So if you look just at this sort of drop in silver, so again, I'm measuring this Fibonacci from the 17th of October, you can see that silver quite positively has actually pushed above the 61% retrace. So it looks as though the bulls are comfortably back in command there. That's quite bullish there. If we look at gold, not exactly, not quite the same. And again, just to measuring there, gold you see is just about at the 50% fib retrace and a little bit of resistance here. But gold also looking quite positive here, pushed out. And that's interesting because that's possibly on this idea that with stimulation checks, Trump continues to talk about his $2,000 to low income households as sort of a tariff bounty. So the risk of inflation and the risk of running the economy hot. And keep in mind, just quickly, if you'll permit me a quick political comment here, the Democrats did relatively well in some of those elections, a few days ago. They picked up a couple of governorships. Obviously, the new mayor of New York City is a sort of a democratic socialist, Mamdani. And so the point is there that maybe the Trump administration is thinking that they need to run the economy hot as they lead into the midterms next year. And so that could be, a situation, as I say, stimulus checks and really try to pump the economy as much as possible. And that's going to bring with it some concerns about sticky inflation and continuing lack of fiscal discipline. And that, of course, is going to be a positive for the gold market, in some sense, the silver market as well. Just interesting, if we look at the metals, to look at the copper, you see that copper, doing okay, but not nearly as explosive price action as gold and silver. So we're still seeing the precious metals, those sort of macro concerns about too much deficit and sticky inflation and running the economy over hot, they're still around. And so I expect to see gold and silver sort of still having structural support. Okay, now I will stop. Have a great day. Have a great trading day, and we'll be back again tomorrow with a macro snapshot. Thank you.